you are either going to deal with some sort of receipt, whether in cash or EFT, or a trade-in for a newer vehicle or a newer machine, okay, usually not appropriate for property then, okay. So those are that is the nature of the types of transactions that are occurring here. There's less formal controls. Because of that, the accounting could result in errors or omissions, okay, because usually the cash receipts would then be governed by the cash and bank cycle, or the trade-in would depend then on the nature of the transaction, what the type of controls would be that could be implemented there. Okay, the risk would be that some of the assets that we've already disposed of could still be reflected in the statement of financial position. Okay, so that affects your occurrence, your existence, your completeness assertions as well. Okay, so for repairs, maintenance, and improvements, the major risk is the fact that some items may be capitalized instead of expensed, or expensed instead of capitalized, and the assertion that is affected here would be the classification. Okay, this is specific to the investment activities cycle or portion of the cycle because of the requirement of the specific asset standards, if I can put it that way. Okay, the PPE, IS 16, IS 14 investment properties, intangible assets, IS 38, etc. Okay, it could also be a misclassification between PPE and investment property, or even intangible assets and PPE if they have a physical component as well as a non-physical component as well. So it's not just between statement of comprehensive income and statement of financial position line items where there could be misclassification, but also within the statement of financial position there could be misclassifications as well. Okay. In terms of the controls, remember, when we look at controls, we don't talk about the assertions anymore, but we now talk about the control objectives, the main ones being validity, accuracy, and completeness. Okay, so for validity, remember, it's similar to the occurrence assertion. So we would then have to start from the accounting records, trace it back to the supporting documents. Okay, it could be a fixed asset requisition, fixed asset requisition form. These should usually then also be pre-numbered sequentially in a sequential order, which can then be used to assist with completeness check. But that fixed asset requisition also needs then further supporting documents, which could be in the form of the specific budget allocation and then the quotes or invoices as well. Okay. For validity, one of the major tests, similar to what we say under the payroll cycle, where the physical verification of employees is so important to confirm their existence. Same with the fixed assets under the investment cycle. We need to be able to be comfortable with the fact that there are no ghost assets being recorded, okay? And that would mean that we would need to do a physical verification of the assets. Remember, management are responsible for the internal controls. That is their responsibility. The auditor's responsibility is to test those controls. Okay, so the auditor is not responsible for implementing controls. However, you need to understand controls of the client in order to be able to test them appropriately. So for authorization, we would need the approved company policy for acquisitions, for disposals, for depreciation, for impairments, okay, etc. Okay, remember we said depending on the organization, how many employees there are, the level of hierarchy that there is, the nature of the organization, the types of assets that it has, that authorization levels or thresholds could differ. Okay, it could be just line management or the board of directors or senior management or the executive committee that needs to approve these transactions. Okay, the important thing is that this authorization needs to be minuted. Okay, so there needs to be some sort of record of the approval or authorization of that transaction happening. For completeness, we've already said the fixed asset requisition forms need to be sequentially numbered, and we can then do a sequence check on that to determine whether there are any duplicates or any missing numbers. Okay, remember we said for the validity objective and the occurrence assertion, we're going to start from the records and trace it to the source. Okay, so we would have from the fixed asset register, we make a selection and we would try and find those fixed assets then on the company's premises. Okay, but for completeness, we're going to go the opposite direction from the source, i.e. from the physical assets, and trace it back to the records, i.e. the fixed asset register, and then back to the general ledger. Okay. For completeness, an important control would also be the reconciliation of the fixed asset register with the general ledger. Okay, and then that would be the control that would be implemented, and then the auditors would need to test that by reperforming that reconciliation. Okay. Accuracy that is recorded as per the records needs to be agreed to the invoice or the contract. Okay, if you have depreciation or amortization or an impairment indicator, okay, that can then be recalculated. Okay, just remember the calculation needs to happen in terms of the approved accounting policies. The inputs into the calculation also needs to be tested. Just remember that the useful lives need to be assessed together with the residual values. Okay. Recording, we've already said there needs to be a reconciliation, fixed asset register, and GL. But for the recording, we can also just trace through from the source document to the register to the GL. Okay. Classification, we've spoken about the different categories of assets on the statement of financial position, and then again repairs and maintenance versus an actual improvement. Okay, this is specific to the PPE standard IS 16. Okay, we need to then only capitalize those subsequent costs which add to the useful life or adds to the usefulness or the useful life of a specific asset. Okay. Cutoff, it is a little bit more straightforward than in your other cycles because we said those revenue and receivable cycle, purchases and payable cycle, those happen on a daily basis, whereas the investment and finance cycle, this is then said sporadically throughout the year as the need arises. So for cutoff, we're not too concerned about year-end transactions, but the transfer of ownership, that date is then the date that we record the transactions at. Okay. So for substantive procedures, we can do similar procedures to testing of controls. Okay, we also inspect, document, and observe procedures. However, this is not the test of a control that management has implemented. This is carrying out an audit procedure to be able to substantively verify a transaction or a balance. Okay, so for substantive procedures, remember we said we're going to look at assertions. Okay, so for existence, once again, we start from the accounting records back to the source document. Okay, the title deed for the property, the registration documents for the vehicle, all the contracts, all the invoices. Okay, and importantly, we said the physical asset. Okay, we also need to physically verify the asset. For rights, we said contracts, title deeds, registration and licensing documentation. Valuation, okay, this is now where all of those accounting entries come into play, those non-cash flow transactions, the depreciation, revaluation, amortization, impairment. These types of transactions, we may or may not use the work of an expert. Where we do use the work of an expert, we need to follow those specific requirements as per ISO 620, and that would be then assessing the audited other experts' competence, their qualifications, their independence, reviewing their work, assessing their inputs for reasonability, etc. Okay. Completeness, we said, start from the source back to the accounting records, from the supporting documents to the records, or the physical asset and back to the records. Okay. Presentation and disclosure, we would then look at the specific requirements as per each of the asset standards, IS 40, IS 16, 38, whatever the case may be, and verify that that has been appropriately disclosed on the financial statement.